Just share it out there, man. All right, let's get into it. So, welcome to inside of the Dallas Virtual Link Up. It is your host, Aaron Evans, also known as the Thanos of trading. Why? Because I think all these markets communicate to each other and we've overcomplicated the process. So, today we have a list of different currency pairs, different futures contracts, some different options, tickers as well, we're going to dive into. So, first, today we're going to dive into US oil. So the way I like to teach, for those who don't know who I am somebody that's going to give you all different kinds of analysis. So I'm going to talk about the sentiment side of things. We're going to talk on the technical side of things and even fundamentals if they apply. So biggest thing with US oil, right? Remember, we understand that we have Venezuela, right? Donald Trump went to Venezuela, took up that oil. And also we have to remember the United States itself is a major supplier. Not, I wouldn't say a major supplier of oil, but we have it as an asset in our own backyards, right? Private equity is huge in the oil markets. Like these guys are getting paid. So with that being said, we just can't be ignorant to what possible plays that Donald Trump can do from an investor mindset. Now, don't even think of us as a president. From an investor mindset, what would he look to do with the excess supply? All right. So with that being said, when you have oil that has been on a significant downtrend, okay, so understand that oil overall for many, many years has been on lots of downtrends. Okay. So oil has been on a huge downtrend from here, right? Because you also got to think, you guys can probably assume down in the chat, well, who owns most of the oil and who's really been supplying a lot of the oil around the world, right? Saudi Arabia. We know this. The royal family, these royal families are not broke. They say they're billionaires, family, they're probably some trillionaires out there in the world, okay? So with that being said, let's not be ignorant to the ability of what these Saudis have. So with that being said, this is all the way back in August of 2025, right? So last year, August, oil's just been on this huge pendulum downtrend. All right. So now in basic trading 101, when if you guys are looking at a pattern such as this, well, we can call yourself like a downward channel, right? This is good to see if we look for either bearish, we looking for bullish breakouts. Now, this is a lazy markup, but I want you guys to understand this is when we see trends start to shift. Okay. So now think about it. Right around January, what starts to happen with oil? Oh, okay. We're going to go ahead and get in Venezuela's pockets, right? We're going to take over their stuff. And then boom, all of a sudden we start seeing the value of oil is increasing because the dollar itself is gaining value because now they have more oil in their hands. So from a fundamental side of things are looking good for the United States from a fundamental side, and that's how we're seeing an uptrend of this nature, right? We're seeing that the trend broke from the downside, and now we see a break of that trend, which we can identify right here. We can see that price broke through this trend, then it came back to retest this price of around $58 a barrel, and now is going to skyrocket to 66. So drop a four in the chat if that makes sense so far of what I just explained from Venezuela, oil, Trump, the supply, watching this downtrend. Now we see that we have a break of the trend and it was tested, and now we're seeing a continuation. Okay, now that you guys understand that concept, now as an investor, as a trader, what are some opportunities that we could be looking for? So the next thing I'm going to eyeball is I'm going to be looking for any kind of key levels. Now, a lot of people have different ways to identify key levels. For me, I look in the daily time frame or the 4 hour time frame for any kind of key level indications. And what I mean by key levels are you're looking for multiple touches. And it has to be at least been an area of support and resistance at one point. So meaning that it's acted as both. Okay. So the biggest thing is if we want to identify key levels, number one, make sure that it was once an area of support and resistance, right? And you have multiple touches. That's the two biggest things you're going to look for. So there's a lot of people identify them in different ways. Me, I do not limit myself to a line, right? I give myself a zone or some kind of range, right? Because at the end of the day, not everything has to be exact unless you want to go down the ICT, smart money, institutionalized, that kind of trading. You want to go super advanced, and yes, then wick entries is a big thing. But if you're somebody like myself, I want to keep it simple. I just don't want to overcomplicate myself. I like to give myself a range, and just because I can then wait for a breakout of that range to give me some kind of entry. Right now, that's a strategy that you have. So I like to look. So one way I can do about looking at support and resistance is, you could take away the candles and you could do a line chart, right? And what you can do is you could just mark off different points. Just get yourself a pencil tool, and you can mark yourself different points in the market with little circles, right? You have a circle here. You can do something like that, something like here, something like here. So as you guys can see, these circles are relatively in the same area. Now, I don't have the exact candlesticks, and that's okay. I don't have the exact measurements for the candlesticks. That's fine. But all I'll do is I'll go ahead and I'll just give myself a little zone that I'll draw across. And now, once I switch back from my line chart to my candlesticks, okay, I may be a little bit off, but if you're a beginner, this is okay. Why? Because now you can just now training your eyes to see what the market is giving you, right? Our jobs as traders is not to bet against the market. We're not here to bet against anything. We're here to bet with it. Hey, oil, if you're bullish today, I'm bullish with you. Like that is our job as traders is to not really be against the market. So trade what the market is giving you, not what you want the market to give you. Does that make sense? So you want to trade what the market is giving you, not what you want the market to give you. So just because you want sales to happen doesn't mean the market is going to give you sales. So it is our job to read technical analysis, understand the fundamentals to give ourselves the best play of the game. So now that I've given myself an idea of a range, where I've given myself some kind of area of interest, now I know that we're at some point of a key level. So there's a couple things that we have to now look for. So now that we understand that trend was broken and now we're looking at an uptrend and then we're also sitting at a key level, there's a couple things that we can do straight from here. Now, if I'm looking at oil, I'm now going to drop down to the 1 hour or 30-minute time frame. If you're doing a top-down analysis from like the 4 hour or their daily of that nature, then I would now drop around two time frames, right? From the daily to the 1, 4 hour to the 30. To each their own. I'm just giving you guys a little bit more of what I would do and some very good beginner stuff from here. So now, once I have my area of support and resistance or like my key level marked off, and I see that price is near this key level, by me dropping on down onto the 1 hour time frame, now I'm going to be looking for price action. Okay, so as you drop down time frames, you move from the bigger time frames like the daily and the 4 hour and the weekly. Those are good for identifying just general trends, reversals of trends, areas of support and resistance, like high level areas, right? Those are things areas that you can make plays off of. Then as you drop down time frames, a lot of people you'll see online or even myself, or if you're getting mentorship by me or whoever, most people are going to say, okay, the lower time frames are what? This is where you now start looking at price action. These are your candlestick patterns. These are like your candlestick patterns. These are your break and retest. This is where you can start applying your Fibonacci, right? This is what a lot of traders simply see. So if we're trading oil, there's a couple things that I'm going to want to do. Number one, I'm going to pay attention to any kind of candlestick manipulation or price action that looks out of the ordinary. So first things first, you guys see this huge wick that came down to the downside. A fun fact, a lot of times with these wicks, family, if you guys are seeing a lot of these wicks, I challenge you to mark down the bottom of the wick and then look to your left. All right. So I want you to find the long wick at one point. Go ahead, mark off the wick, mark off the very bottom of it with a line, and then look to the left. You'll be surprised that a lot of times these long wicks, they're just retesting a previous area of support or resistance. That's all they're doing. That's all they're doing. So now you don't have to be scared about news. So when you see this happen and you see, oh, price just went to an area of support, which is exactly what NAS 100 did. That's all it did. Where did it go down to? It just went down to an area of support. Oh, so these big news candles, these 930 opening candles, these red folders, CPI, PPI, KPI, ABCDEFG. You know what I'm saying? No matter whatever three-letter word that the politics and all the governments and the banks will throw at you, they are no longer fearful if you understand that 99% of the time, these news candles that come out, all they're doing is just bouncing off areas of support and resistance. That's all they're doing, guys. All right. So drop a two in the chat if this is making some sense so far. Look, I'm trying to keep you guys real simple for you guys. That's all they're doing. That's all they're doing. Drop a two if this is making some sense. Okay, so you no longer got to be scared. Just know, okay, I got a red folder coming out. It's got to do is got to find some point of area of resistance. And then, guys, last thing about these long candle wicks and why it's important These Wicks family are indicating that we are collecting money, or what they like to call liquidity sweeps. So let me break this down. Let me break this down in a way to make this make sense. Actually, matter of fact, let me say on the chart. I got an idea. I'm gonna break this down into a way that's gonna make sense for you guys. So check this out, right? So I'm gonna annotate really quick. So think about it like this: when you guys are trading the markets, okay? Think about imagine you guys have four bases. Y'all remember Foursquare? When you was a kid playing Foursquare, right? You had the king in one square, you had the queen, the jack, and the trash. For those who played Foursquare, right? Think about these are the four people that are trading in the markets at any time, right? You have us, right? We're called retail. Okay, we have retail, right? We have money to spend, right? But we don't have a lot of money to invest. Okay. But the governments know this, right? That's why taxes are a thing. We're getting tracked on how we spend. That's how CPI and PPI comes out. It's how we are spending. Okay. That's getting tracked. So there's retail investors, right? Then remember, you guys have what? Businesses. Okay, you got businesses. This is your Teslas, right? You got your Teslas over here. You got your Nikes over here. You got your Verizons, right? These companies are also investing in the markets as well, looking to make a profit. Then you have, guess what else you're gonna have? You're gonna have institutions, right? You're gonna have the banks, right? You're gonna have banks, institutions, right? You're gonna have the JP Morgans, which is JPM, then the JPM sticker, right? You got the institutions, you got BlackRock, okay? These guys got billions and billions of dollars. And then guess what you have over here? Governments, right? Entire countries are making plays, right? You guys saw El Salvador. El Salvador is now one of the richest countries in the world because they invested over like 45% of their GDP when Bitcoin was $40,000. Now, let's be honest. Would you trust, would you have the confidence to bet 45% of your country's gross domestic product on Bitcoin at $45,000? Would you have the money to do that? Would you have the confidence to do that? Most of us wouldn't. I wouldn't do that. What? I'm betting my country's future on Bitcoin. You know what? And he did, and he's winning big time. So think about it. If a government is willing to risk all that to even get a sliver of chance to sit at the big table, because let's be completely honest, family, there's only three countries that run this world: the United States, China, Russia. That's it. There's only three countries that really can defend themselves. They got the guns, they got the military, they got the police. Notice how every country just flocks to one of these three. Look at every country's geopolitics. Everything you see on social media, they're flocking to one of these countries. Hit me on the side if you start seeing that similarity when we leave tonight's call. Why am I telling you guys this information? It's because the money moves like this. The retail traders go to the businesses and buy up their goods and services. The businesses then are going to go move that money and transact it inside of the bank. Same thing with retail. We move our money into the bank, right? Governments are also moving money into the bank. So what is the bank doing? The bank is providing funds out to each of us in different manners, whether it's loans, whether it's credit and things like that. So, but who runs the market? Who runs the markets? The stock markets, the investment markets. The banks do. So if the banks are the ones that we're giving money to, whether in the form of a deposit, and then they're loaning back to us credit, they're giving banks loans, the banks are moving their money and they're moving stuff around, and now the banks are controlling the markets. Well, the banks need money from us to make the markets move. Because guess what? The banks got to make some money somewhere. So if the banks are either not making money on us from transaction fees or from interest, right, or from late fees or anything like that, if the banks are not making, that's not enough for the banks to even sustain. That is just a sliver of what these banks are making. They got to go into the markets. So guess what they're doing? They're taking our money that we're putting in and they're pulling money into these markets, and then now they're making it move up or down. So guess what this happens? This is why liquidity is important. And this is a good note to guys to write down, and we'll pause there for a second. This is a good thing to note down when it comes to liquidity sweeps and why liquidity is important in the markets, and why every single market, all it's going to do is find the nearest zone of liquidity. If you can figure out where the liquidity is in the Forex market, in the futures market, in the options market, you will make a bag for the rest of your life. If you can figure out liquidity and know where the market is going, that you won't lose, because that's all the money is doing. If the banks need money for the market to move, then you'll understand why you'll see these long wicks is because all they're doing, they're just collecting orders that either retail left, aka stop losses, the businesses set for themselves, aka earnings, governments have placed, and aka of legislators and laws and NGOs. All the banks are going to do is go ahead and collect those previous orders. So now where prices can go fill it up and then continue its trend. Because in order for the market to move, money has to be moving in the market. That's where the terms volatility and volume come in. All volume and volatility is the bank is dumping money from businesses, retail, and governments in this asset called oil to be able to make the market move in the direction that they can get a profit from. I know that was a crash course, and I know that was a lot, and I hope that that clicked. Drop a one if that you kind of caught what I was saying. All liquidity is, ladies and gentlemen, it's just money the banks need for the market to move. That's it. Drop a one if now you understand liquidity a little bit better. All right. So liquidity is everywhere. So these long wicks, support and resistance, these candles, right, guys? All that is just money being moved in the market. All right, and all we got to do is figure out where is the next big pocket of money, and we just got to position ourselves in that piece. So for oil, here's what I'm going to look at, and we're going to move to the next asset. And my goal is to teach you guys different concepts on different assets, so you guys are able to make this understand here. So let me delete all of my annotations. Okay, beautiful. Okay, so where am I going to be looking for oil? All right, so we know that price came down to this block here, right? A lot of people will call this an order block. There's so many different names for this, but I just like to call this just an area of support resistance, honestly. And so what I'm going to do is I'm going to draw a zone roughly the size of the bearish candle, right? I'm going to draw my zone and I'm going to spread it out. And I'm going to change the settings a little bit so it's a little bit clearer. So let's see if we do this white. No, let's make this green, and then we'll make this inside green, and then we'll fade it out. Okay. So as you guys can tell through here, I went ahead and decide and picked the candlestick for my zone. So the good thing is with support resistance, ladies and gentlemen, is when you guys are marking off your zones on your charts, find a candlestick that best represents that area, right? It doesn't have to be large like for the Forex. Keep it within 50, 30 to 35 pips. If it's futures, keep it within maybe 5 to 10 points. The candlestick don't get to be that large. You know what I mean? Something that's small, something that's significant, because more often than not, because I picked this candlestick, then you'll start to understand like, oh, this long wick, all it did was just touch the zone. And then if you really wanted to get fancy with it, now this is where we get high level now, right? This right here, basic, if you can practice identifying these zones, you're killer. Right now, you'll be able to play off these zones. You'll be able to set pending orders at these levels, which we'll talk about. But now, if you wanted to get really fancy, now you slap a fib on these kind of zones, something like this. And now you'll get really crazy that if you'll be able to figure out that at least a 25% fib in a 1 hour, in a 25% fib on a 1 hour zone from a red news folder candle is going to come down and wick this with a wick entry and then retrace all the way back up. That's when trading gets really serious. All right. So this is when people start getting into sniper entry. So just to kind of break down how we got here. Number one, we understood, okay, well, what was the reason of this long wick and why did it come down to this level? That's number one. Number two, let's identify the level that it came from. We're going to take a candlestick. We're going to find a candlestick that best represents this level, anywhere from that 5 to 10 point range, 50 to 25 pip range. In options, keep it within 50 cents to $1. The range is not that large, right? Especially in options, the candlesticks and the dollar, math is a little bit larger than the other markets, but the concept is still the same when marking up the chart. And you come down here, you get yourself a zone, and now you'll be able to rock off this. So my next analysis is going to be this. If you guys see a long wick candle that's going to leave like this, most of the time, this wick is going to get filled, meaning that there's going to be more candlesticks that are going to form on its way back down. So if my current analysis for US oil that you guys can take is I'm going to be looking for price to come back down to this range. And then I'm either going to be looking for a break, retest, and continuation back up, or I'm going to be looking for oil to do something like this, where now I want price to come to this range, break my zone, retest, and then drop. And now If I'm going to find a target, all I'm going to do is I'm just going to mark off previous highs. There's a high formed there, and here's a low formed here. And so, ladies and gentlemen, that is essentially how you guys really create a setup. So you identify the trend that you're in, you understand the fundamentals of why the trend reversed of what's happening, right? Then you have it on the higher time frame. Then you come down and break it down. You come down to the hour, the 30-minute. You identify key, you have those key levels. Now you find yourselves areas of support and resistance. Look for those long manipulation candle wicks, right? Look for those candles because those candle long wicks, there's information. Okay, trade this, all of this is information. As much as it is money being moved, a lot of it, guys, is information being shared. It's ideas being passed by the rich. The rich, do you not think the rich are networking just as much as we are? I bet you the rich are networking way harder than us, just in different ways. They may not be having the time to pull up at an event, wear a nice suit, get a name tag, but I bet you they are on Zoom calls like nobody's business. They probably use Teams, Slack, way more than we ever imagined, right? Because that is just how they're communicating. So think about all the different stuff that they could be sharing that we're not privy to. Do you not think they know that, OpenAI is releasing the IPO before Wall Street Journal makes a report? Like, think about it for a second. If the news gets to us, we're behind. Technically, we're behind because I have a degree in journalism. So I understand that I went to an editor, then it got to get to a writer, and then it gets to the news person, and then it gets to you. So it's already been filtered and ran up through by 4 people before you even got to see the initial report. So guess what? Trading for me is it just erases all that stuff. We get live data right here. This allows us to finally find out, okay, what could possibly go on. So to leave you guys with this, before we move on to the next asset, is to leave you guys with this. Remember, you trade what the market gives you, not what you want the market to give you. You trade what the market's going to give you. So for us, it is our job as traders, allow for the market to come to you and then watch for a reaction and then take a position. Let the market come to you and then react, then take your positions. Let the market come to you, wait for a reaction, and then take your positions. Okay? So, scale of 1 to 10, how are we feeling? Have I lost anybody? Have I lost anybody? How are we feeling today so far? I've been kind of ripping it here. Just want to do a little pulse check in the room. Let's do a little pulse check. How are we feeling? Scale of 1 to 10. We liking the information? Feel like we getting some value so far. We're gonna get real stewed up. Okay, we got some good game. This is good. This is good. Okay, next asset. So we were on oil to speak on that. But we're gonna go to options, IWM. Let's type into the option side. Okay, so I love the IWM actually. Very beautiful, beautiful, beautiful pair. Beautiful asset for sure. Okay, IWM. Right. So IWM, we understand that in the options game, ladies and gentlemen, when you guys are trading options, right? The difference between options and Forex and futures, a lot of it is that understand that yes, you're trading a company's ticker, but they're always a name for the underlying asset. So the underlying asset is what the option sits on. Without the asset, there is no option. Okay. So the more that you guys understand the underlying assets, then you guys can understand how to follow those kind of fundamentals. So for example, IWM is the Russell 2000. It is an ETF. So now you can go, okay, well, what is the Russell 2000? Oh, the Russell 2000 is 2000 small cap stocks. Oh, interesting. Okay, well, who makes up the Russell? And then now you start figuring out, okay, who makes up the Russell? Okay, what kind of money, what kind of volume and liquidity do they deal with? Right. So now you can start understanding who participates in your market. Right. For the Forex side, you guys are dealing with governments, you guys are dealing with currencies of countries, right? The Canadian dollar, those are governments. For my stock options people, guess what we're dealing with? We're dealing with companies. We're dealing with the Nikes, the Teslas. We're dealing with stock companies, right? If we're dealing with options. For futures, right? For futures, what you're doing is you are trading future agreements. That's what the future market is. The future market is you are trading future prices. You're trading a contract that could happen in the future. And now these are the numbers that you're trading. It just gets crazy. So when you guys understand the participants, now you understand, okay, well, what's happening with IWM? All right. So if we want to identify a trend, let's start from the top. Let's get to the daily time frame. All right. So overall, we can see that IWM, from a higher time frame, has been on the up and up. It's been pretty bullish. Now, one thing that we understand about uptrends, one thing we got to understand about market structure is that once an area has been broken, it got to be tested in order for a trend to be true. So when we're looking at uptrends and things like that, there's a reason why there are peaks and valleys in a trend. All right. So if you're learning to identify a trend for the first time, or you're trying to understand, okay, well, what's a swing high and a swing low? When you're on the line chart, what you're going to be looking for is you're going to be looking for the highest peak out of a sharp move in a singular direction. So think about it like this. You're going to be looking for stuff that looks like this, right? You're going to be looking for moves that are very similar to a straight arrow to the upside, right? So sometimes you'll see moves that look like this. That's a little bit choppy. On its way up, it's still up, right? It's still an uptrend, but it's a little choppy on the way up. So you're going to be looking for moves that are most similar to straight lines. And so the sharper the move, that's the higher the peak, or that's the lower the low. And I'll show you guys in a downtrend as well. But for example, for IWM, as you guys can see, I'm using my mouse here. I don't know if you guys can see my mouse. If I'm on a mouse, I'm scrolling down, that shrinks my chart like sideways. And then if I scroll up, it spreads them out wider. And then I can move my cursor up and down and it lengthens and widens it. So if anybody was curious. But something I like to do is like, okay, I want to look for more of the sharpest moves that I can, and I want to mark those off. So I'll look for a sharp move like this. Okay, that's a great area you can mark off. This high right here, this is a good area you can mark off. And then now you can mark off this low. Okay, this looks like a good sharp low. This looks like a really good sharp high. All right, so we've identified, hey, IWM is an uptrend, and there's three different phases in the market for those who don't know. So there's three phases that in the market you want to understand. So first, every sharp move in a direction, very sharp direction like this, where there's usually a lot of volume, right? Or it's a reversal of trend, something like this. These are what we like to call impulsive moves. Very sharp, right? Very sharp, very rapid, right? Think about it like this, right? You ever get into an argument with somebody or you get really, really mad at your kids and you snap at them, right? That's that impulsive move. You know what I mean? Like, when I was growing up, my mom was one of those people where if I walked past her, she'd just reach her hand behind and slap me in the back of the head. It was just so impulsive. Right? Boom, bap, got me. She didn't have to look. It was like second nature to her. But then all of a sudden later, guess what? She calms down, right? She calms down or he calms down and there's a retracement of those emotions, right? They come down to what? A level head. So the next move is what? A retracement, right? Think about your emotions, right? You get really, really heated for a moment and then you take your breathe, right? What do? We take deep breaths. We calm down the emotions, right? Consider that the retracement where we're trying to come down. We're trying to become what? Level. Don't we all say that? Sometimes we get too emotional, like, hey, I'm getting back to the change of character. Exactly. Exactly. Think about it. Think about it as you as a person, Bridge. Think about you as a person. Think about it. Well, you remember a time you got really, really angry at something that changed your character. You got really, really angry. And then what you do, you tried to level set your emotions for a second. And then you continue and at that point you explained why you were mad, right? That was your continuation of the anger. I don't know if I'm confusing anybody, but when I think about like emotions and how our emotions work, the market works just like our emotions, where we have an impulsive reaction, meaning that there's a sharp movement, a sharp reaction, and then we have to retrace, meaning we need to pull back, right? So we have the impulsive move, and then we need to pull back. We need to find level. We need to find a level, okay? Then once we find that level somewhere in this retracement, we can then continue in the same direction, breaking this high. So that's how a trend is identified. So when I'm marking this off on my line chart, just because it's a lot easier for me, especially if I'm just a beginner, I even do this even now. I still love the line chart to this day. So now I can stop annotating. That's great. You can delete these. Okay, beautiful. And then we'll go here and go delete that. Awesome. So now I come in here. Now that I've identified my higher highs and higher lows, what I can do now is I can just go ahead and identify, okay, where could this retracement be? So something that you guys see, this is where you guys can start beginning, people start utilizing their Fibonacci tools. So because Fibonacci, all the Fibonacci tools job is to do is to measure out the retracement. That's all the Fib's job is to do is just measure a retracement. And Fibonacci's are best. The best Fibonacci's are used in a trending market. All right. Trending markets, right? So if you're trading in a consolidated market, meaning the market's moving sideways, something like this, right? You don't really know what Gabe's doing. Don't use fibs. They're pointless at that point. Use them in trending markets. So we can see that IWM is in a bullish trending market. So this is great. So now we can utilize our Fibonacci tool to figure out where could be a potential entry for us to buy IWM for longs, right? The trend is bullish. I'm bullish. The market's telling me bullish. I'm not going to bet against it. We're looking for bullish plays. But I'm going to tell you guys a secret. Before you guys mark your fib, when you go back to the line chart, so you guys, so the candlesticks, you guys can see this impulsive move right here. Before you guys mark off your fib to figure out the retracement, identify any previous highs in the uptrend. So identify the previous higher high. Mark that off. Mark off that previous higher high. A reason why that's important is because remember, break, retest, continuation. Right? So the market doesn't have to pull back all the way down here to do this. So the reason why I love to have that marked off is because here's the kicker. When I draw my Fibonacci tool from this swing low to our swing high in a bullish uptrend, swing low to swing high, something like this, now I can identify where is this previous higher high in the uptrend in relation to my fib. And then now I can give myself, I don't have to give myself an exact entry because I'm trading options. I can give myself a range, something like this. So now this gives me a point of interest. So now I can give to myself, okay, so I'm going to be waiting for IWM to come down in between 258 and 257 or 256. Let's see if we drop down time frames. Let's see how close we are to that price. We're almost right there, right? So now we took the higher time frame analysis. We're back down to the hour, and you guys can almost see with pinpoint perfection. Look what happened to price. What did price do, ladies and gentlemen? It did the same thing. It broke, retested, continued over and over, right? So it's just what a fib is? Absolutely. Fibonacci, guys, is a retracement measurement tool. Okay. And Fibonacci is all about the Fibonacci sequence. If you ever heard of 3, heard of the Fibonacci sequence in school, your palm, your earlobe, right? Flowers. The Fibonacci sequence is everywhere. But in trading, it is a tool that allows you to measure the retracement of a trending market, whether it's bullish or whether it's bearish. All right. So that is what the Fibonacci tool does. So if you were looking for AE's analysis of IWM, there's two things that I'm going to be doing. Same thing I did for oil. I'm going to let price come down into the 258 range. I want to see a break and a retest of this level before I take my buy. Or I would like price to come down, break this level, retest, and then drop. Now, overall, is my analysis overall bullish? Yes, because I'm in an uptrend. But once again, anything can happen. So my first bias is going to go with the trend, which is yes, I'm looking for buys. But if this level, because it was a higher time frame, which was the daily time frame, which is a higher time frame analysis, that's why I can see price can break and drop and continue. It could happen, right? I'm just not going to be privy to not seeing both. It can happen. Anything can happen in this game in trading, right? So that's the thing you want to understand, right? Nothing is guaranteed, right? We just got to react to what the market's going to give us. So for IWM, I'm looking for price to come down to this range. I would like a break, a test, break, retest, and continue. Or I would love for price to break through the zone, click this, and drop. That gives me the range of 258 to 257, either for a call, 258 calls, or I'll be looking for a price for 257 puts. So that is what I'm looking for options. For my options folks, hope that made sense to you guys. For all my other traders, if you understood now how Fibonacci is utilized in uptrending markets, go ahead and drop a 4 in the chat of if that information makes sense to you so far. We're doing well on time. We're doing pretty well on time. Alrighty. We had to cut one more asset. We did IWM, we did a metal, which was oil. We did IWM, we're gonna do gold, and then we're gonna end with NQ, the futures contract. I still not to be explained to me. All right. You have the ability to unmute your mic. Ask away. What about Fibonacci are we not understanding? Just so I can at least understand where your head's at. Let me see if you have the ability to mute your mic. Yeah, I think you do. Yep, you can unmute your mic if you can. If not, then you can type in the chat. Alrighty, where is my... Do I want to do gold next? Yeah, let's do gold. Why not?
I don't. Can you hear? Oh, can you hear me or no?
I can. Go ahead.
Oh, okay. Because how, I don't know. I'm looking at it, but how? Sorry, I
No,
don't
you're
know.
good. Please
Sorry,
be
I'm using my
transparent.
phone. I'm on my phone. I'm not on my computer. So,
Oh, okay,
well,
okay.
okay.
No, go ahead. What's up?
I'm trying to see. Okay, so what do we use it for
Yeah,
again? If you could explain that, I'm sorry.
of course. So you're using fibs to measure the retracement of an impulsive move. I'll pause right there. Okay. Do we good on that? That definition, Miss Natalie. Okay. That is what the fib is used for.
Okay.
So now, and all it is just to help us. As you guys can see, I've been measuring gold. My goodness. I'm delete all my markets from gold from scratch. So, gold, let's talk about it. Let's talk about gold. Okay. So, gold. I have a lot of feelings about gold. Just because I've been messing gold for so long. So I'm gonna give you guys some game about gold. Okay, so let's give you guys some game about gold. This is applicable for my futures folk and for my options folks. So for futures, I don't know what the contract. I think it's GL something right now for the contract of it, but for gold and options game, it's gonna be GLD. And then you have for my forex people, this is gonna be XAU USD. All right. So for those who are following, here's some games. So do we all understand that gold is a physical asset? Yes or no? Do we all understand that gold is a physical asset that we can go out and go buy? Okay. Now, because you know, and then because you understand that it's a thing that we can go out and buy, it is also something that was once used as a form of currency.
Right.
All right. So we understand so far that it is a form of currency. And I know I'm just turn my Telegram for a second. It's a little loud, but okay. So now we understand that it was a form of currency. Okay. So if it was a form of currency, that means there was a market for it to be exchanged, right? Anytime that it was any kind of currency that's used, there's a market for that. That's how the forex market is a thing. That's why $7.3 trillion a day is moved in the foreign exchange market. It's just currencies being circulated. All right. So because gold is what was once a currency that was circulating, and because it was an asset that we can wear, that we can melt, that we can trade, for goods and services. That's why we're able to trade gold in the forex market, but there's also contracts for it in the future side and in the option side. So when you guys are trading gold from a option standpoint, you're trading the ETF. You're trading the ETF that is sitting on the value of the gold asset. So you're not really trading gold, the physical thing. You're just
Right.
trading the value of the asset.
Right.
Yes. Go ahead. Yes, Natalie, you were saying?
Oh, I'm sorry. I'm just agreeing with you.
Okay, okay, for sure, for sure. All right, I love that. No, so remember, so gold, the asset itself, right? It's the physical thing that gets mined out of the ground. We know we've seen the gold rush, all that stuff, okay? If you're in the options game, These GLD, you're trading the ETF that sits on the gold asset. That allows you the option. Same thing for the future side. Okay? So you're trading an asset class that's connected to the physical item, which is the physical gold. On the forex side, what you're trading in gold is you're trading the exchange rate for how many dollars, US dollars, it will take to buy 1 ounce of that gold. So you're trading the exchange rate, and then for everybody else, they're trading based off an ETF that trades the value of it. And so that's why the numbers maybe look a little bit different. That's why the tickers sound name a little bit different, but everybody is still essentially messing with gold altogether. So it's our job. This is why I look at gold as I look at it for what it is. What is the value of the item, the rock itself? What is happening to it? How do people feel about it? So this rock gold, essentially, all right, this rock is a safe haven asset. Okay. That means in times of panic and in times of war, what do you think the rich are going to do? They're going to find ways to park their money. And so in the early days, do we know where all the gold used to be stored in the world? Take a guess at where a majority of the gold was stored in the world. Just take a guess. Little history. Here, look. Africa, in the ground, yes.
Yes.
In Africa, yes. In the ground. Thank you. In a vault, but which vaults? Switzerland. Okay. Shout out to Obendo. So the gold, the physical gold asset, after we were extracted for its resource in Africa and went to Europe, okay, it sat in Switzerland. All that gold, a lot of that gold used to sit in Switzerland, and you guys probably would have guessed this, but also the Vatican, the church, offerings, the church was a huge place where money was being stored. The church, and then Switzerland. Switzerland had the banks, the Vatican ran the church. You put no wonder why the Vatican was never touched during World War One or World War Two, and Switzerland. Where do even today, all the religious popes still go to the Vatican to get sworn in as what? Archbishops. They still go to the Vatican to this day. It's just the way that it was set up. It's just the way that that money was set up. So now when I understood that, I go, okay, well, what happens to price in times of panic? It buys immediately. Why? Is because the rich, they're going, oh no, something's happening. We need to park our money, and we need to beat. Everybody put the I word in the chat. Well, what does everybody like to say? We're trying to beat what? Put the I word in the chat. What's that I word? Our goal is to beat what? Inflation. That's all the rich want to do. If you beat inflation, you're profitable. And so now gold has always been one of those assets, and it also legitimized people's wealth. Because guess what happened during the 1920s and the gold during the Great Depression and these bank runs? Guess what they were trying to go grab? Their gold. So then guess what happened with Richard Nixon? He cut us off from the gold standard in 1973. So what did that immediately do? That means we can print unlimited money. And so now we have no idea how much gold is actually worth nowadays. But there's one thing that is always true. So as people are betting, oh, gold's going to 6,000, gold's going to 7,000, gold's going to crash to 5,000, gold's to crash to 3,000. Here's the key to get all that noise out of your ears. Focus on people's emotions towards gold. When gold buys in times of panic. So what's happening in the world? What do we see? Panic. Everybody being scared. Everybody's getting worried. ICE. Gaza. Iran. Israel. The Congo. What else? Lebanon. Mexico. Venezuela. Cuba now. Everybody, it just looks like constant panic. Gold is going to continue keeping on buying. Until there's a sense of security and peace in the world, gold will always buy. And so that is triggering all this parabolic movement. That is what's triggering all this parabolic movement. And guess where it started? Guess where it all started? August 25th. Like August 25th, gold has been on a unprecedented run. This is the most insane gains we've ever seen, especially in the gold market. I've never seen stuff like this before, and I've been trading gold for years. But you know what that means for us? There's a lot of money sitting here. That means under all, and this is why I want you guys to look at this. When you guys see big moves like this, you know who also did a big move like this? Bitcoin. You know what also did a big move like this? Nvidia. You know who also did a big move like this? Silver. They all did the same thing. So what? Oh my God. You know what also did a move like this? Right before the 2008 depression? Bullish runs. So now, what can we think? Okay, let's think as investors, y'all. What can we now start imagining? Okay, that means there's money sitting in this market. That means there's liquidity. Okay, if there's liquidity, that means there's money to be made. As a trader, now we need to go find it. So we know we're in a huge uptrend. If I went on a line chart, when was the last real peak? It was all the way down here at 4,500. That's insane, right? 4,500. And then we have a retest right around this 4,600 price. I'm going to give you guys some game on gold, man. Here's some game on gold. You guys want to learn how to read gold for real, for real? Watch this. For every $100, right? For every $100, that's a psychological level. I call it PL, psychological. Okay. Big psychological number. All the big banks and all the big businesses and the governments, they love looking at gold from a $100 standpoint. So from like 5,100, 5,200, right? That's when you guys see articles come out, they always relate to these numbers. So that if the news and the media is relating to these numbers, that means the banks are telling them to relate them to these numbers when they write these articles. Do you ever see an article come out that says, hey guys, gold just hit an all-time high of $5,179.34? Do you ever see CNN, the Wall Street Journal, CNBC ever say a number like that? No, they always relate back to the hundreds place. So if they relate back down to the hundreds place, that means there has to be something important about that. So I think about it, that's institutional. Okay, so now if I understand that price broke at this level and this point, let me go ahead and mark off these $100 price points. Let me just mark them off. I'm going to go down to the candlestick. Let me just mark off all the $100 price points and see what's happened at all those levels. So let me go ahead and mark off. So let me mark off 4,500. Just about right about here. 4,500. Let's mark that off. Let me mark 4,600. Insane. Just relative. Let's mark off 4,800. Let's mark off 5,000. Just about. Now let's mark off just the previous high. Insane. 55,596. That's relatively 5,600. And then guess where it went right back to? Just about 5,100. If you are studying gold, study the $100. The market will literally step on those hundreds over and over and over and over again. They just step on the hundreds. Even if we drop down time frames, I'll drop down to the hour. All it does, just steps on the hundreds. Do you guys see what I mean? Look at all the market structure. Where's all the market structure happening? Around the $100. You get yourself a break from the hundreds place, you get yourself a retest right around the $500 mark. Hear what I just said? You get yourself a $100 break and you get a retest on the $50 in middle. Y'all not hearing me. Y'all not hearing me. Here we go. Watch this. Let's do the coordinates. Look at this. Price action broke 4,600. What did price hover? Right around the $50 mark. Price screamed. You know what? You know what? Watch what happened. Guess what happened when it went to the next $500 mark? Or the next $50 mark. Excuse me. Boom. Look what price did. Broke. Candlestick wick retest. Continue buying. Look what happened when price came back down to 4,800. broke, retested, took off. Went down to 5,000. What happened at 5,000? Broke, retested, took off. What happened at 5,100? Look, $5,100. Broke, it broke, and then guess what price did? Retested $5,100 to the nose. And now guess what? And guess what price did when it came down to here? Where's price at right now? 5,300. So where do you think? Where do you think gold is going to most likely move? Like, if I'm in an uptrend, where do I think gold most likely go to? It's only going to go. It's only going to go two places. Prices either come back down to 5,100, or price is going to come right back up to roughly 5,500, just like this. 5,500, right about here. That's all gold's going to do. Study the hundreds place. You now learn gold. You studied $100, you learn gold. You don't think this applies? Watch this. Don't this applies for the options game? Hmm. I beg to differ. Let's mark this off. 40/20. 40/20. We can look at 40/40. We can go to 40/60. We can look at what's this? 40/70. I mean, like, it doesn't, they don't look that different. In my eyes, in my eye of eye, I don't think these charts look any different than what I just did on the Forex side. I just marked up a Forex chart and it looks dang near the same this options chart is. Does it not? So, and now all I did was the $10 marks. Still, same rule applies. And I bet you if I pulled up the futures one, I bet you the same rule applies. So do you guys drop a seven in chat if you guys now understand that it is better if we all know that all the markets speak the same? Do you guys now start to see that they all just look alike? They all look the same. Drop a seven if you're now starting to see that it's just all the same. It's all the same stuff. But do you guys also see how I marked up market structure on one chart, but you see how you can apply it on something else? It's the same kind of thing. Everything is applicable everywhere. So with this being said, guys, I want to, like, we've been doing this for an hour, right? We went over gold. We went over gold. We went over the futures contract. We're going to finish off with the futures contract, and I want to open the floor for some questions. Okay, futures contract. We'll look over NAS. I've been tearing up NAS lately. NAS is my favorite thing right now. So NAS is in a huge, it's like, honestly, guys, NAS is in an uptrend overall, right? We understand that NAS is an uptrend overall, but what are we going to do, right? So when you guys have a huge long wick like this, okay, so why did price come down to this level? Oh, that's interesting. We see the same thing on the daily time frame that we see on the hour. So it's not by a guess, right? And guess what we did? We had a price. What we do? Price broke, gave us a little bit of an order block. It broke, and so now we're just going to wait for that nice little retest, which it just did. And if I drop down time frames on the hour, I mean, that's exactly what it did. It broke. You guys can even see it here. On the lower time frame, price came up, broke, retested the zone, continued up, and price came back to this range because of the daily time frame, and now it's continuing. So my last concept I'm going to teach you guys that you guys can learn on NAS, that you guys can learn on anything, but I'm going to use NAS for it, is I want you guys to understand the importance of I'm not gonna call them fair value gap, but imbalance. Okay. I don't like to say fair value gaps because I don't want to overcomplicate that because everybody explains it differently. I'm just going to talk about imbalance. Okay. So imbalance is in the market. The market always needs to be balanced, meaning anytime you guys see a big candle like this, 99.9% of the time, the market is going to find a way to fill this up. So if you understand the anatomy of a candlestick, right? If you understand the anatomy of a candlestick, right, you understand the body and you understand the wick, right, you understand what's going on. Every single time there's a two candlestick cluster, all right, each candlestick must be able to fill each other up by at least 50%. So if I drew the halfway mark on this green candlestick, which was roughly about here, notice how this red candle, by bare minimum, filled 50% of it, even if it leaves a wick that's lagging from it. So something like this. Even if there's a wick lagging from it, that still means that it filled up at least 50% of the orders that the previous candle gave us. So that's happening all over the market, no matter where it is. Like you guys can see it even right here. I'll just give you guys a prime example. Notice how we have this green candlestick and you have this red bearish candlestick. If I drew the halfway mark of that green candlestick, notice how this red candlestick, the wick, even still went past 50% of this green candle and then closed above it. That still means this candle has been filled. That means all the orders of this previous candle have been taken care of. If they haven't been taken care of, that means you leave yourself a gap. All right. And these gaps occur in between three candlesticks, and they are in between each wick. So that's why it's important to understand the anatomy of a candlestick. So let's say, for example, well, how would a gap form? So what would a gap essentially really look like? So if I was looking at let's say I was looking at a bullish gap yeah, let's look at a bullish gap, for example. So I'm going to draw one candlestick down here. I'm going to make this green. And then I'm going to draw the next corresponding candle next to it. I'm going to make this green just like this. And then I'm now going to draw the next candlestick over here. Right. In the Japanese candlestick Bible, a lot of us would like to call us the three white soldiers, right? If you guys read the Japanese candlestick Bible, this is example of the three white soldiers. Okay. So the three white soldiers candlestick pattern, but you're going to notice something when I add wicks. If I add a wick to the upside here, if I add a wick side to the upside here, something like this, something like this, and then something like this. Well, family, if you guys look between the difference between this two candlestick formation, notice how this wick at least filled 50% of the body, but notice how this wick and this wick failed to fill up the 50% of this candlestick. All right, so that's going to leave a gap. That means the market is going to be imbalanced. So I'm going to mark off a zone right here, and now I'm going to mark off a zone right here. Now, with this gap not being filled, I should expect the market at some point to do something like this. Maybe make one more candlestick, maybe turn around and do something like this, which now turns into a red candle. Then you have this one. You might have another green one pull up, try to fake you guys out. It might do something like this, fake you guys out, and then leave a huge wick candle. Maybe use a huge wick to the upside, right? Trapping this liquidity or that free money that was there. Gets those orders in, fakes everybody out, and then guess what it likes to do? What did it do, family? Drop. Come right back down, something like this. And now that is what you wait for. And so inside a lot of these gaps, you're going to see that, okay, if a gap is left, then you know that the market is going to pull back to these gaps. And remember, at least it's 50%. So if you can find the halfway point of that candlestick, if you can find the halfway point of that candlestick, that's where you can either take an entry of a continuing trend. So for example, you can either do two things with this. You can either take this entry and continue the trend. You'll place your buy limits. You can take your trades here and take the trade to the upside. Or what I'd like to do, one of my favorite things I like to do, is if I have the market in this kind of position, and let's say I missed it. Okay, so let's say I missed this whole move. I'm like, dang, I missed this whole move. But guess what? Guess what? But guess what? This big red candle just left another gap. Ain't that crazy? Okay, great. Another gap was left. Uh-oh. Uh-oh. They left me another gap. So what I'm going to do, I'm going to go ahead and take that money. Oh, here, I'm going to leave me one more red candle. I'm going to leave me one more red candle, something like this. Boom. And now, guess like this. Now, guess what the market going to do? Shoop. Come right here, fill this gap. I take me a buy entry trade. I catch this move right here, take profit. Literally. So now I ate in two different ways. Now I take that trade up and I'm gonna catch that gap. There's one TP. I take the next high, there's a second TP. And I know there's a lot of markups I just drew for you, but watch what I just did with Nas, this future contract today, and you'll see it what I played out live. But this is what I mean by the market always needs to find balance. So you guys see big candlesticks like this. You guys see big candlestick wicks. You guys see these huge long candles. Mark them jokers out. Find the halfway point and then just watch what the market does. It's going to find a way to come fill that up. So this is exactly what Nas did. That's exactly what Nas did today. So check this out. Let's look at the NQ contract. All right, so I know I'm on the index, but I think it was what NHQ, and then I don't think they have it on here, but it's okay. We'll just do. I just like where I'm at right now. Okay, so check this out. This is exactly what Nas did. Okay, so remember, think again. We had this huge what? We had this huge impulsive move. So we understand that Nas is on an uptrend, right? We saw that trend broke from here to here. We saw that this trend was broken, or this downward channel that Nas was in. Just another way to, identify it. It's, to each their own. We saw that Nas was kind of in this little bit of a downward kind of little pattern. And we saw that price came up and came up, broke it, retested, and continued. All right. But remember, now that we had a news event come out, which is an excuse, news is just excuse, we see a huge red candlestick to the downside. All right. So what am I going to do? I'm going to do the same thing I showed you guys previously. I'm going to find out where this wick came from. Why did it come to this level? I'm going to mark off the bottom of it. Okay, great. So I see that price came here before. It was just another area of support and resistance. So that's perfectly fine. And so while I was watching this today, because I missed this whole down sell, I didn't make any money on this sell today. I actually made all my money on the buy. That's all I did. I made money on this retracement. So what I did is I saw this huge candlestick drop, and then I was just kept watching it. So right around 9:30 this morning, I was just watching. When I saw this huge wick rejection, I was like, oh, I found the level. I waited for the candlestick to close, and I'm on the hour, right? I'm on the hour time frame. Just watching this on the hour. I see the candlestick came down to this range. It closed above it. I'm going to mark off this low. So now I'm just going to react. I'm going to react to this. But why did price close at this level? Oh my goodness. Do we see that two candlestick cluster that we saw on the previous times? There's ain't no way. Ain't no way. Another area of support. That's interesting. Okay. Candlestick pattern 101. Nas loves bullish and bearish engulfing candles. Nas loves bullish engulfing and bearish engulfing candles. Nas will eat it up. Same thing as gold. So I saw this. So we saw this big red candle. Here's our gap here and here. So we know these orders got to get filled to at least halfway. So I saw this big engulfing candle. I said, all right, we got an impulsive move. Let me drop down 2 time frames to my 15-minute. We got the big impulsive move on the 15-minute time frame. I got my reversal candle here, which once again is just a break and retest, which pretty much that's all it did was break and retest. We'll go here. So price broke this level. And then what price wanted to do, come back and retest it. I waited for at least price to pull into this range because once again, I'm not based off of a specific price. I'm looking at a range. So I see that price is close to my range here. I took an entry and pretty much I rode it all the way up to the halfway point of this candle, to the halfway point of this big red candle. And if you guys remember on the hour, take my ruler tool. I measure the body of it from wick to wick. I'll do from wick to wick measurement, just like that. And look at my take profit would have been right here at the 50% mark of the red candle. Target smashed every time. So I just taught you guys how to trade news. So if you guys ever see a big news candle like this, mark off where the wick is, see if it leaves you a big candle. You know price is going to fill up at least 50% of that at some point. Find your entry, find your levels of support resistance on the lower time frames, understand what trend you're in, and now you find yourself an entry. So guys, that's everything. That is about an hour and 15 minutes worth of stew. How do we feel? Scale of 1 to 10. How do we feel about the information? Did we learn something today? Was this a resourceful? Was this class good? Do you feel that your time was spent well here? Drop a scale of 1 to 10 and be honest. I want to be blunt. Y'all let me know. Did we learn something today? Was this a definitely there's some new things? Thank you, man. 10. Definitely there's some new things for sure. For sure. I love it. I love it. I love it. All right. So I'm gonna I'll go ahead and open the floor to some questions. So any questions, Bridge? You're more than welcome to unmute your mic and we go ahead. So Bridge, you're up. I'm gonna remove my pin just to kind of open it up to everybody, and then we'll go from there. So go ahead. You're up. I'll do switch the camera.
Yeah, I just wanted to say thank you. I'm a person that I love teachers and I'm not like into hype and I don't follow people, you know what I mean? Like I'm not a person that just jumps on trends or follow people that you know what I mean that may be trending or kind of well known, but I wait for people I wait for teachers because I think I have a teacher's heart too, but I love teachers. And I just want to say thank you because you have made things so much simpler. Like obviously I know a little bit about trading, but I definitely want to learn more. So I'm just gonna let you know that I'm gonna show up as much as I can. So just thank you so much.
Absolutely. Absolutely. Of course. Thank you for being here as well. Brittany, you're up. What do you got?
So how long have you what's the longest you've ever stayed in a trade? Reason why I'm asking is because I jumped in a Euro USD today in Forex
Hmm.
and I'm trying to figure out, I'm not in profit, but I'm trying to figure out like what's a good time frame, like 2 weeks or a couple of days or just let it go.
Okay. I will break it down from where you asked me. The first question was, well, how long is the longest I've ever held a trade?
Mhm.
I held it, the longest trade I've ever held was for 4 months.
Oh,
I
okay.
swung Bitcoin from 55,000 to 100K on my Forex account. I swung BTC USD from 55K to 100K, and that took me about 4 to 5 months of swinging. So that was the longest trade I ever held. Now, the reason why I held it that wrong because it's now your positions at that point. So the duration for how long you hold your trades is determined based on the time frame you entered on. So if I am taking a trade, if my entry was based off of, let's say for example, I'm marking up my charts and I take an entry based off of the daily time frame. Like I didn't drop down to the 4 hour, I didn't drop down to the hour to find my entry, I didn't drop down to the 15 minute, then my daily entry trade is going to take more time for it to work in fruition.
Okay.
So if I'm taking a trade on the daily and my entry was based off the daily, it might take me 4 days for that trade to finally make its move because every candle is worth a day of time. So now that's when you're talking about, okay, I'm looking to swing trades. So you might be holding trades for multiple days because now you're on a higher time frame taking that analysis. As you drop down, the 4 hour and the hour is interchangeable because I've seen people take a 4 hour entry and swing it for a few days. I've seen people take a 4 hour entry and close it out within 1 to 2 days or even 3 days because they're either looking to sweep a previous high or a previous low from the previous sessions. And that is a game changer. That's the stew right there. All the market is doing is looking to sweep those levels. So, how long did it take for the market to go get that liquidity? So, if you're on the 4 hour, the hour, yeah, I might hold the trade for a day, maybe up to 2 to 3. I might not even hold it that really that long. But if I'm in that, then now the next question is that's based off of time. But Brittany, let me be honest with you. I don't have that kind of patience to hold trades out that long. That's just who I am. I don't have that kind of time. My rent does not wait for nobody. Rent, gas, food, waits for nobody. My
Yeah.
stomach gets hungry when it wants to get hungry. So I got to make sure that my finances are on pace with my lifestyle, my current lifestyle, not my future lifestyle. So that's why I was saying, like, take profit as you go, like having those funds pooled in. Because for me, I might set my trading profits based on an income goal I'm looking for today or some kind of percentage gain I'm looking on my account. So some traders are like, hey, I'm looking to make 5% of my account. They figure out the math. So Chris, for example, he's with Verizon and Cisco. So he may not be in the markets day to day. He might be more somebody, hey, I'm looking for a position and I might hold it for the entire quarter. That might be his mentality. But the reason why that's a mentality is, hey, 10% growth for him may take a quarter for him to get there.
Mm.
10%, but then also, we don't know how much capital Chris got. So Chris might have 100 bands. 10% of 100K, that's 1,000. It's not a lot. That's 10,000. That's not a lot. So, but $100 account, $10 can happen real quick. You just hit the same 10% goals that he hit, but you guys had different capital in the beginning. So so now your 10% of $10 may not be his 10%. So you might set your goal that way. Or a final way you can set how long you're in trades for is, let's say you set your goal. Like what I liked to do in the beginning was I wrote down every bill that I ever paid for, from my most expensive at the top to my bottom bill. I called it my gratitude ladder. And so let's say I was trading and I didn't know how long I want to hold the trade, or let's say I didn't know when to close, because sometimes traders, we get profitable and we don't know when to take profit. We don't know when to do it, whether it's market structure or we just get greedy. We add entries. We just like, man, I'm going to ride this thing forever. But it may not happen that way. Okay. So a final way I'll give you is this, Brittany, and I know I'm kind of throwing a lot at you, but I'm really speaking to the whole choir too while answering your question. The last thing I would provide is, I like to call it my gratitude ladder. So I would rank every bill from my most expensive to my cheapest. And so as I'm trading and I'm going in profits, if I ever hear that inner demon going, let's keep holding the trade. Let's keep holding. We're going to make more money. We're here to flex on our friends. We're going to post on social media. Yeah, what a lot of trading mentors do. Let me hold this trade so I can post this on my TikTok and post it on my thread so I can sell my course. We know how the play is going to go. We see it all the time. And this is not to bash them. It works, because guess what? They're making money on those courses. Sorry, it works. But anywho, that greed, we're not there at their level yet. We're still trying to make ends meet. So when I hear that little greed come in my demon, like that little demon come into my ear, I look straight at my value board. I go, okay, I made $30 today. What bill did I cover? You know what? I covered my Netflix bill. I covered my Patreon subscription. I just paid for something like this. I just paid for my Spotify. So I use that to check my gratitude. So my greed is always beat by my gratitude ladder. And I'm being so for real. That helped me with my greed early, so I can be grateful for my $30 days. So guess what? You may think, oh, I got to hold this trade for 3 days, 4 days at a time, but you might already hit your financial goal in 30 minutes. So figure out, when you're trading, before you get in the market, what are you looking to get out of it? So for all my demo traders right now, it may not, for right now, I'm not looking to get out of money right now. I'm looking to get the mechanics down. Can I get confident getting in the market, right? Can I get confident getting in and getting out? Do I know how the buttons work? Do I know the different limit orders? What's a market order? What's a limit order? How does that look on my chart? How does that affect my margins? Like, that is what the demo account is about, is figuring out the mechanics. So then when you hop into your live account for the first time, you're not jumping in there scared. You already have knowledge going in. You know what I'm saying? So that's pretty much to answer your question, Brittany. That's when you really know. You can do it time-based, based off the time frame you're entering your trades. You could do it percentage-based, based off of the balance on your account. You can do a dollar amount based, like, hey, I'm looking to make $50 today. Or you can do the way I did it, was I just based it off of the bills that I owed and was like, you know what? I made enough to pay my Netflix today. I feel grateful. Let me go ahead and close out my trades, and let me go ahead and do an internal transfer out of my account so I can secure that profit, so I'm not trading my profits.
Okay. All right. Oh, I just wanted to say one thing. Kiana, she actually had gains yesterday, even though she didn't raise her hand, but we text back and forth.
You had to put a business out there like that.
Yeah,
What is she?
I just
What is
want
she?
her to be proud of herself.
Yay! Congratulations. Kiana also been coming to the meetups as well, so shout out to her. Big future trader in the room. So shout out to you. Round of applause. Thank you everybody for being here today. I really appreciate you guys' time, honor, and patience. We've been here for about an hour and a half. So I really appreciate all of you guys for being here. This has been a great session.